Okay, NSE not listed, but a number that is widely tracked by the street, and maybe you can look at BSE as a proxy if at all. But the margin number is what struck me, Mahima, as I was looking at it. Profits, of course, up 10%, total income up 9%, contribution to exchequer at 14,331 crores. Operating EBITDA margin has gone from 74% to 78%. I mean, I know this is an IPO that is much awaited, a lot of interest because there are more than 1 lakh investors who have unlisted shares right now. And let's pull up BSE as well to see if something is happening there. But NSE just telling you about, the numbers just telling you about how lucrative this space is, and there's just a two horse race as of now, only one of them is listed.
Absolutely, and I think the kind of margins uptick that is seen, it's not something that we've seen in BSE before, from a 74% to a 78%. It's quite a significant margin uptick, and we'll have to wait and watch out for as to when the IPO comes, how the subscription pans out, because overall it's been, the markets have been muted, and we've not seen the kind of flows and the kind of listing day gains in a lot of these counters, but NSE is one of the IPOs that will be most widely probably be subscribed and watched out for, definitely. Now shifting focus to L&T, because that's poised to report a strong quarter with expected revenue growth of around 14% and a 22% rise in net profit as well in Q1. Anushi joins us with more details on what you can expect from the L&T earnings.
Right, I'll start off with the basic numbers first. Now, if you are talking about the headline numbers, revenue is expected to, as you mentioned, see a 14% of a growth. Margins mainly remaining flat at the levels of 10% or odd, so while net profit may see about a 22% of an increase. This 14% of an uptick that we are looking at revenue is mainly to be driven by the domestic business, and that's the kind of outlook that we are seeing according to the coverage that we have so far. Even if you look at the order inflows, that will be driven primarily by the power transmission and distribution business along with the business buildings and factories sectors. Now there was a new order win today as well in the hydrocarbon business from the Middle East segment, so commentary on that front is something that we should be looking out for. In fact, if we look at the order inflow growth, there are expectations that this may see some tepid sort of a growth considering deferred domestic tendering which has taken place, while EBITDA margins will majorly remain flat. Now what we should be watching out firstly is the order prospect pipeline. This is in between both the domestic as well as the international business. How that pans out, if they've increased the guidance towards that front, is something that we should be watching out for, especially in the Middle East segment. Execution timeline for both of these metrics in the domestic and international segment also on the watch list. Also along with that, how improvement in projects and manufacturing business will drive the EBITDA margins forward in the subsequent quarters is something that we should watch out for. Well, just to reiterate the FY26 guidance given, now the company did say that they see about a 10% of an increase in terms of their order inflows, while revenue may see about a 15% of a growth, and core margins, that's the project manufacturing margins that we're looking at, are expected to remain in 8.5% of line, while net working capital to revenue ratio should stand anywhere between at 12%. So this is the overall picture that we are seeing for L&T.